Hello, good afternoon. Welcome to another Currencies Direct Sterling Euro weekly podcast with me, Keith Spilnick. It is Friday the 18th of March. Well, Sterling Euro, we're trading at 114.55, so we are significantly lower than where we were this time last week, nearly a whole cent and a half lower. We're actually now trading at a 4-month low against the euro. The main reason really for sterling's demise against the euro in particular, it's all linked to the disaster in Japan. You see, in times of crisis, investors tend to look for safe haven currencies to put their money in. Normally you're looking at either euro or the dollar. Now, because the Eurozone's had a fairly positive week in the form of we had good data out for Greece and possibly Ireland now getting a bigger bailout package than expected, and we had a stronger than expected bond auction here in Spain, has led investors to put their money in the euro, all of which has obviously strengthened up the euro and caused sterling to drop below that psychologically important 115 level. Then to add fuel to the fire, because of an unusually strong yen yesterday, some of the G7 economies actually came to the market in a bid really to weaken the yen to really just settle what would otherwise be a very volatile market. The ECB has been a key figure in this, selling the yen and buying, you guessed it, the euro. Result of this is euro dollar shot up. It's now trading up somewhere like 114.70s, all of which has contributed to sterling's freefall. Now, following another month without an interest rate hike in the UK and inflation also being at a record high, sterling really needed some positive data to try and push itself back above these terrible rates. And what do we get? Well, news that UK unemployment has reached a 17-year high, more than 2.5 million now unemployed, and youth joblessness also at a record level. Next Wednesday in the UK we do have George Osborne releasing the UK budget, and by George we really do need a clear positive growth strategy if we're not to see more sterling weakness. Now, with the Eurozone being really the clear odds-on favourite to raise interest rates before the UK, sterling's likely really to remain under pressure as investors reconsider really the chances of a rate rise in the next few months. That's all for me for this week. Please don't forget to check us out, www.currenciesdirect.net. Have yourselves a fantastic weekend.